If you have questions, concerns, and are just lost when it comes to planning for retirement, meet Steve Hoyle and Derek Caldwell of the Hoyle Financial Group. And right now, we have a very special guest here with us today, Shawn O'Keefe. And you guys are going to talk about a very special, specific, but very important tax strategy. So, Steve, I want to toss it on to you and Shawn.
Thanks, Jess. Glad to be here today, Shawn. We're so glad to have you. I talk so much on the show. It's about not what you have, but it's what you have after taxes and fees. And, today we're going to talk about a really unique tax strategy that allows the seller to potentially defer all the taxes of the capital gains so you're able to keep your part and keep the money that you would have paid to Uncle Sam working for you. Shawn, tell us about this.
So, hey, Steve, thank you. This strategy really allows the seller of a highly appreciated asset to defer all the taxes on the capital gains so that we can keep what you would have paid to Uncle Sam working for you. It works really well for small businesses, allows them to continue to build their wealth for entrepreneurs. It's a great exit strategy. It can be the biggest financial decision they ever make. And many owners are reluctant to sell their businesses due to the few options they have around taxes eating up a large portion of their life's work. But with this strategy, Steve, we can position the proceeds of the sale so that your money continues to work for you as hard as you did for it.
I think that's so huge. I see so many people that all of a sudden are giving, 40% plus of just the federal income taxes to Uncle Sam in one check. And it really changes the landscape of how much money they have when they exit. And, I think this opportunity is great for people with, closely held businesses. Shawn, we've even seen it work for people that took a few year payout. They're 2 years down the road and they hear about our strategy and they call us and they can come see us, and it's not too late to exercise that. Tell us about it, Shawn.
Yeah, so, what it really boils down to is it falls under code IRC 453, form of an installment. It's paired with a specialized trust. So on the settlement, similar to a 1031, this is not a 1031, it's a 1031 exchange alternative. The money goes into specialized trust in a lump sum at the settlement, so you're not taking constructive receipt of the proceeds at the sale. Otherwise, that would be taxable in the eyes of the IRS. So the idea here, you may or may not need income, right away. If you don't need income, the beautiful part about this, the deferred tax strategy, is just that. You can defer it and let it compound. That money that would have otherwise been paid to Uncle Sam is compounding on a deferred basis. It's up to 20% capital gains. Then you're talking about potentially a Medicare tax and any recapture depreciation on real estate. So it can take a real big chunk. And I know that Texas, not unlike Colorado, there's a lot of oil there. There's a lot of oil in northern Colorado. And you can sell your oil rights and not get killed with capital gains. So it's important to know this is not a 1031 exchange. It's a 1031 exchange alternative. And it can be a way to rescue 1031 exchange if it's going now on real estate. So whether you want to use this strategy for the sale of business, piece of real estate, or any other highly appreciated asset, it could be a car collection, it could be art, it could be a number of things. Now, capital gains tax on art and car collections is a whole nother level. You've got about another 7 or 8% in capital gains there. So the baseline, you could be looking at 27, 28%, and then so it can be a big chunk of the proceeds from that sale.
Shawn, one of the things we see a lot in our neck of the woods is people that, have made a lot of money in the oil and gas business and they want to exit it. They're ready to be done and they need an exit strategy. And this makes a great way to do that. I see also a lot of people that have a huge ranch or land and, they don't want to wait around for the stepped up in basis. They want to do something now. And we help a lot of people with that. Expand on that a little bit, Shawn.
Yeah, Steve, that is exactly. We do that all the time with people that have this highly appreciated asset. Actually, just this past week, I had a gentleman who had purchased a piece of property in Aspen, Colorado. You know, Aspen, of course, the appreciation there has been insane, but like $150,000 back in 1960s, and now it's worth $25 million. And he wants to get out. He doesn't want to wait till he passes on. He wants to sell it now. So same kind of thing with farms, you know, in Texas or any place in the United States, you know, other types of highly appreciated asset. This can be a great way to be most tax efficient. And also there's ways that we can create some very effective estate planning strategies. If you're selling, you know, multi-million dollar piece of asset, it can be not only income tax exposure, but also you've got the potential estate tax exposure. So a number of different strategies can be applied here with this deferred tax strategy that we have.
You know, Shawn, I see that so much in our neck of the woods where people have this huge, you know, ranch or all this land, and the estate taxes, you know, they can't pass it on because they've got to do something to take care of that, you know, with generational wealth. And I think that's something that we can really help people with. One of the things we see in our area, through Austin, Round Rock, that part of Texas, we see a lot of people that made a lot of money in tech companies. And, you know, there may be 3 or 4 owners. If there's just one owner, we can help them. But if there's 3 or 4 owners, you know, people will call me and say, Steve, what do I do? You know, my partners just want to pay the taxes and go on, but I don't. And we're able to help them with this strategy. Shawn works with us and really help them make the decision for them. It doesn't matter what their partners are doing, it's what they're doing. Correct, Shawn?
That is correct, Steve. Yeah, it's a great exit strategy. We call it a way out. It's a great way to exit a business or a highly appreciated asset. And if you are in a partnership, as you suggested a moment ago, you can actually break up partnerships. Maybe there's 2 of the 3 want to get out, so the one person's going to stay in and buy the other assets. That's great. It'll work for those 2 people, or if they, if you know, 2 of the 2 people that want to sell, one of them wants to pay the taxes, the other one wants to defer the taxes and grow and compound that money over time, then this is a great solution for that type of scenario. But, you know, it works with all different types of highly appreciated asset. There are some restrictions on public companies, but if you have private stock, it's a private company. It works great in all those different areas. And it's really up to the individual that is selling the asset, what they want that money to do for them throughout their retirement, generational wealth planning. We build plans around this, and then it's entirely up to them as to how they want that money invested and what they want it to do for them. Do they want it to create income, or they want to defer and compound it as much as possible? We call it tax engineering. If you pay all the taxes at one time, you know, you're going to pay the maximum tax level. But by spreading it out over time in installment payments, it's a form of an installment sale that can be deferred. And by spreading that out, what you're doing is you can tax engineer, you can minimize the taxes over time.
Engineering a tax strategy, having options, you know, all of those things are important. So, I mean, I think what people need to do is just, if you're thinking about selling, or if you're in the process of selling, or if you've already signed a contract, if you're in the middle of a 1031 exchange, that you're second guessing, should you have done that, or you missed the deadline on the 1031 exchange, or in the next 2 or 3 years, wait, I want to sell my company. How could I do this? Pick up the phone and call us and let us really sit down and talk about it and see if it's right for them.
Yeah, absolutely. And, you know, of course, with real estate, not 1031 exchange, but if you're selling a piece of real estate, most people that own real estate, one of the reasons they own it is because the way they create deductions and depreciation of the asset. Well, when you go to sell that asset, you have to recapture. There's a 25% recapture tax on that. So not only do you have the capital gains, you got recapture depreciation, and it can add up to a big chunk. So that's another factor with this, that recapture depreciation can be deferred and compounded on rather than paying that to Uncle Sam when you go sell that property.
Well, I really appreciate your time on the show today, and the listeners call us and let us sit down and do a free tax analysis and see if it works for you. Thank you so much, Shawn.
Hey, it's my pleasure. Thanks for having me, and good luck to all you listeners out there that are getting ready to sell a highly appreciated asset.
If you'd like to sit down with Steve and Derek or a member of the Hoyle Financial Group, visit retiretexasstyle.com.
Hoyle Financial is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and/or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. Bonus annuities may include higher surrender charges, longer surrender charge periods, lower caps, higher spreads, or other restrictions that are not included in similar annuities that do not offer a premium bonus feature. Read your contract for restrictions, limitations, or penalties. By contacting us, you may be provided with information about insurance and annuity products offered through Hoyle Financial Group, Texas Insurance License 1719183.